This report brought to you by the Richmond Club, where investors and high-growth companies meet.
Our third presenter today is Tom Atkins. He is the CEO of Mammoth Resources.
So my name is Tom Atkins, President and CEO of Mammoth Resources. I'd like to talk to you about Mammoth. Just to set the stage, Mammoth right now is trading at as low a level as it's traded since it became a public company in 2012. We hit that low in the period of 2015 when gold was $300 an ounce, less than it is right now. Well, before we had spent $800,000 on a successful drill program that attracted a $2 billion market cap company, Sierra Gold, to invest up to $13 million to earn a 70% interest in our Tenoriba property in Mexico. So I'd like to tell you a little bit about Mexico and tell you a lot about our property, although I'm going to go through it quickly. I hope that if there's any questions we can follow up at this meeting, and also please contact me at the details that are on the presentation or on our website for more information. So just quick facts about Mammoth. Everyone wants to know we've got 30.7 million shares outstanding, fully diluted 40.6. Most of those are warrants that are exercisable June 14th of this year at 13 cents. We're currently trading, or there was a $4,000 sale yesterday, we're trading at 3.5 cents. We had a bit of trading after the announcement of this transaction in late December. There was an individual that contacted me with about $25,000 that he needed to cover in buying. That shot the share price up to 10 cents and settled the day at 8 cents. So it doesn't take a lot of buying to move the share price. I'm a 10% shareholder. There are a number of other 10% shareholders, some major institutions, and some people close to me that are in the 5 to 7% range. So we are quite tightly held. I'm a geologist, MBA. I worked for 7 years in mine exploration and development. I've been an investment banker and corporate banker. I've done billions of dollars of equity financings, mergers and acquisitions, and I was previously the CEO of Crowflight Minerals and Castle Gold. And during my tenure with both of those companies, we were able to produce in excess of 200% annual returns for those companies. I'm not going to talk about the rest of the management. They're available on the website, and I've got limited time. The agreement with Sierra highlighted some of the points in red. So it's an option agreement, has up to a 7-year term. They're committed to spending US 9.9 million, Canadian 13 million. It consists of 2 tranches, the initial being US 5 million for a 51% interest, and then a second tranche to go from 51 to 70 with an additional 4 million, and will be paid Canadian $1.2 million in property payments over the tenure of that agreement. Just as far as our share price performance, on the upper left you have gold, in the lower right you have ourselves. We declined as the gold price declined last year, although I'd say more aggressively. And again, I make note of that 30,000 of buying that moved the share price up to as much as 10 cents that day and over that period. Now, just to put valuation in perspective, so we've spent $5 million Canadian on Tenoriba. We have a $1.2 million market cap. The Sierra deal attributes a value grossing up to 70% to 100% and our 30%. That equates to $5.6 million value. So right now we're trading at about 20% of what we have spent on the property, taking into no consideration that we're actually a publicly listed company. So I'd like to talk about Tenoriba, our project in Mexico. I'm going to go through the slides kind of quickly. There's a few points to each one of them, but what I want to impress upon you is the size of the mineral footprint. It's 15 square kilometers, and it's open in all ends. It's about 5 kilometers to 6 kilometers by about 3 kilometers. We get gold ubiquitously throughout this area. And very simply, you do not get gold spread over such a large area if it's not from a highly robust system. And it's for that reason, and the drill results that we've got over that area, where we've had good economic intersections, that's what's attracted a company of the size of Sierra and attracted their investment. So we're located in Chihuahua State, in the prolific Sierra Madre. So we've all heard the movies, The Treasure of the Sierra Madre. It's a prolific gold belt, long history going back to colonial times. In the last century, 80 million ounces of gold, of historic gold production. But in the last 25 years, names I think that we're all familiar with have discovered, produced up to 40 million ounces in this gold belt. And you can see our location there in the lower left of that map. Just zooming in a little bit on the property as well, we've got access in all directions by road. We've got good infrastructure, power and water. There's actually an airstrip, a gravel airstrip within 20 minutes of our project camp. You can see $2 million was spent by a predecessor, announced the drill results in 2008, global financial crisis came, they couldn't sustain their commitment. We picked it up for a real deal price in 2012, and we've spent $3 million for the total $5 million in project expenditures. Here we see the project area, and just pointing out a few of the sort of highlights. So that's the airstrip there. We drive up this road 20 minutes, we're at our field camp, and we have access right to the heart of the property. It consists of 53 square kilometers, 5,300 hectares, and consisting of these 3 properties here that we're earning 100% interest. We've got $30,000 of payments to be made at the end of the year to earn that 100% interest, and then we've staked this additional 1,800 meters here, which we own outright. Zooming in a little bit further, mineralization right now is occurring in 3 large, 1.5 kilometer or so areas. El Moreno to the west, Masopari in the middle, and Caranitos in the east. Still open in all directions. This is about a 6 kilometer trend here by about 3 kilometers here. It's a high sulfidation system. So these are prolific systems. They're throughout the Pacific Rim, North America, Central America, South America, as nearest examples. El Sazel, 2.5 million ounces, Mulatos, 4.5 million ounces, are within a couple hundred kilometers of our project. We've got all of the characteristics, and it's for that reason that Centerra is attracted to this property. This shows some soil sampling. It's a grid soil sampling, 5 kilometers by 3 kilometers. The areas in red are up to 0.2 grams per ton, 1/5 of a gram of ton per gold. In an open pit heap leach setting, that's economical. And we're getting those grades in soil, not in rock, in soil. So extremely anomalous grades throughout a very large area. This is where the drilling was done in the past, this little area here. There's a trend of about 3/4 of a kilometer here. All of these holes hit economic gold, and you can see some of the intersections. There's 1.9 meters of 1.5 ounces of gold per ton. That's 100 times richer than what could potentially be economical in an open pit heap leach setting. You can see some other grades. There's 34 meters of over a gram, and there's 66 meters of about 1/2 a gram, just as an illustration of some of the success that they had in the drilling in 2008. Oops. This is some of the sampling that we did when we acquired the property. We did an extensive mapping and sampling program. We took over 600 samples, meter up to 2.5 meters. And I'm just going to highlight the one area, Caranitos here. All of these red boxes are areas where we sampled in from 10 up to 74 grams of gold per ton in surface sampling. And then you get to lower grades of 1 gram to 10 grams in the tan color, and you can see this distribution. In this Caranitos area, which measures about 1.5 kilometers by about 3/4 of a kilometer, of 146 samples, 74% of them were higher than 0.3. We didn't announce anything below 0.3 because we would just be having tables and tables of results when we announced. So we did a cutoff at 0.3, but 76% of them were better than 0.3. They averaged 1.56 grams per ton gold in an area 1.5 kilometers by about 3/4 of a kilometer, just as one illustration. Gold occurs as free gold. And so what that means is this is amenable to heap leach processing. It's a low cost. I was CEO of Castle Gold. We were mining at $1,000 an ounce of gold per ton. We were mining 0.45 gram per ton gold economically. This is an area where we did some channel sampling. So we wanted to demonstrate that we could get not just chip samples, but we could get continuous samples with economic grades. So we sampled throughout this 5-6 kilometer trend. And the results are that we had, you can see some highlights here, 15.5 meters. And again, we were only limited by the continuity of the outcrop because we wanted to get a continuous sample. There's 15.5 of a gram and 0.7. There's 7 meters of 1.36, 13.5 of 1.55. The average, we had a couple of stinkers, 0.08 and 0.12. We take out those stinkers, we had a total of 129 meters, not continuous, but throughout the area, grading 0.77 on average. We did geophysics. We only covered about 40% of the property. The reason we did that is we didn't know if it would work. We were going to blow our brains out. Capital was tight, covering 100% of the property, so we did 40%. And in that, there's a 1.2 kilometer gap between some of the lines that were done here, and it's open in all directions. This is a pretty color diagram that shows just some of the continuity of the trend, where we were getting some anomalous features in the geophysics. This is where we drilled. So these are the locations of our drills. We did some step outs from the historical drilling, but we also went to areas as much as 1 kilometer outside of where there had been previous drilling. So we really stuck our necks out to demonstrate the potential over this 4 kilometer trend. And here are some of those results. 8 of 11 of the holes we drilled had potentially economic grades. So a couple of highlight ones here. Here's 10 meters of 1.13. There's roughly 6 meters of 3.5% or 3.5 grams gold. There's 5 meters of 5 gram per ton gold, 23 meters of 1.32. And we had one intersection here, we had 127 meters of 0.52. Remember, 0.45, we were mining at 1,000 gold in a heap leach setting economically. And within that higher grade sections of 58 meters of up to 0.8. So it's these kind of results that attracted Centerra to this opportunity. This is just a section. So this is looking north where we've cut a vertical slice from west to east. As we go into the western part of the deposit, we drop down in topography. It's not that steep. We've exaggerated to show the lengths of some of our drill intersections where we've encountered some of the rocks that we're illustrating here. That's what the actual vertical looks like. But we drop down and we get closer to the porphyry source. That's the source of the gold mineralization. The gold didn't fall from the sky. It only could have come from deeper in the earth. And we're getting down to this, getting nearer the source of the mineralization, which means we could get higher grades. We could also see the introduction of copper into the mineralization. So as far as our program going forward and the news flow that we think will help to attract a better share price than we have right now, Centerra, we signed the deal December 20th. Centerra was on the ground a month later. So very quickly they sprung into action, had people on the ground, including experts from Europe, experts from South America that are experts, doctorates in these types of systems. And so they were all reviewing the data and coming up with a business plan or an exploration plan. They're currently in the field mapping and sampling, so they're familiarizing themselves with the rock, taking into account what was learned from our drilling and applying it to what they see on the surface. They're going to follow up with the geophysics survey. And they're using their own in-house expertise and equipment to do the geophysics. And these guys are experts at this stuff. They do it around the world. And we've got access to those resources. They're doing some community consultation to allow permitting. And the objective is to permit for potentially up to 100 drill target sites. And then we expect in the second half of the year, we'll begin the drill program and we'll start announcing results of that. And we have every expectation that drilling will continue into 2020 and with the potential of defining a resource. And I'll just give you a bit of an example. When I was negotiating this transaction, the corporate development person with whom I was doing the negotiation kept making reference to a project that Centerra had optioned in Turkey. It's called the Uskut project. So they optioned this at some point in 2009. In 2012, they had developed sufficient interest and resources in this project that they bought that 30% interest out for US 40 million, Canadian 53 million. Okay, so right now we've got a $1.2 million market cap. And precedent is, with success in exploration there, they bought a similar type asset, similar type geology, where they proved up a resource for $53 million 2.5 years later. I can't say it's going to go that way, but that's precedent. So thank you very much for your attention. And as I say on the website, if you have any other follow-up questions, please feel free to contact me, email or telephone, and I'd be happy to answer any of your questions.
If you enjoyed this video, please let us know. You've been watching the Richmond Club Report. If you've just come across this channel, please feel free to subscribe. I'm sure you'll find a lot of interesting and profitable investment ideas around here. We'll see you again soon on the next video. Cheers, guys. Have an amazing and profitable day.